Welcome to Sophie Daddy's channel. Today we're talking about one of the biggest, most fascinating stories in the entire market, NVIDIA. Now, this company just posted financial results that honestly would be the envy of any company in history. But the market's reaction, well, that told a totally different story. So let's unpack this, the paradox of perfection. And let's be really clear about this. The numbers were absolutely staggering. For its third quarter, NVIDIA brought in $57 billion in revenue. That's a 62% jump from just the year before. Earnings per share up over 60%. I mean, by any normal measure, this wasn't just a win. It was a total grand slam. And yet, after a little pop, the stock actually sold off, dropping more than 3%. So this is the big question we're digging into. How can a company that is firing on all cylinders, at the absolute peak of its game, see its stock take a hit? The answer, you'll see, tells us a whole lot about where the market is right now. All right, here's how we're going to break it all down. First, we'll tackle that paradox of perfection. Then we'll really dissect the quarter itself. After that, we'll look at why the bears are starting to get louder, and that includes a new big short theory from Michael Burry. We'll examine the real threats to NVIDIA's dominance, and wrap it all up with the tough dilemma facing every single investor. So first up, the paradox of perfection. This is really the core idea here, that NVIDIA is in this strange new territory where just being amazing isn't good enough anymore. The market's not just looking at today, it's pricing in a future that has to be absolutely flawless. I mean, just take a second and let this number really sink in. Over $57 billion in a single quarter. This isn't just growth. It's a statement. It's a show of complete and utter dominance over the entire AI revolution. NVIDIA is the one selling the shovels in a global gold rush, and business is just booming. And that right there, that gets us to the heart of the problem. When you're this massive and everyone expects you to be a superhero, just flying around isn't impressive. You have to break the sound barrier every single quarter. The market has priced NVIDIA for absolute perfection, so anything less than a mind-blowing, earth-shattering surprise just feels like a disappointment. Okay, so let's actually perform an autopsy on this so-called blowout quarter. What were the numbers that Wall Street was really looking at, the ones behind the big, flashy headlines? This is where things get a little more interesting. Now, to get the market's reaction, you first have to understand something called the whisper number. Forget the official consensus you hear about on the news. The real target, it's the unofficial number that gets passed around between the big hedge funds. It's the unwritten expectation, and honestly, it's the only one that truly matters. And here's where you can see that gap between what the public sees and what the pros are thinking. So yeah, NVIDIA easily beat the official numbers, but look at where it landed compared to that whisper range. Right in the middle. So for the big money that actually moves the stock, this blowout wasn't really a blowout at all. It was just what was expected. And this chart, wow, it perfectly shows both NVIDIA's incredible success and maybe its biggest risk. The data center division makes up a jaw-dropping 90% of all their revenue. It's this massive, powerful engine of growth, for sure. But it also means the company's entire fate is basically tied to this one single market. Okay, let's talk about gross margin, because that was one of the numbers everyone was watching, and it slipped a little bit. Now, this wasn't about weak pricing or anything like that. No, this is the cost of living on the absolute bleeding edge of technology. The new Blackwell chips, super complex to make. That high bandwidth memory they need, very expensive. And when you sell whole server racks, you get more revenue, sure, but the margin percentage is a bit lower. It's just the physics of building the future. So all of this brings us to the other side of the coin, the growing bear case against the stock. Despite all this incredible success, we're starting to see the first little cracks in that bullish armor, and they're coming from some pretty smart people. The bear argument really boils down to three things coming together at once. First, the law of large numbers. It's just really, really hard to keep growing this fast when you're already this huge. Second, you're seeing some of the smart money head for the exits. And third, the competitive and even geopolitical threats are definitely starting to pile up. And this was a huge red flag for a lot of people. When you see early influential investors like Peter Thiel and SoftBank completely cash out, the market pays attention. No, they're not saying NVIDIA is a bad company. Of course not. What they're signaling is that maybe, just maybe, the stock's insane rocket ship ride is starting to run low on fuel. Which brings us to the biggest bear of them all. Michael Burry, yeah, the guy from The Big Short, has turned his gaze to NVIDIA. And his argument really questions the entire foundation of this AI boomerang. Barry's big idea is something he calls circular revenue. He's basically arguing that we're caught in this very fragile feedback loop, and that maybe the crazy demand for NVIDIA's chips isn't as organic as it looks on the surface. Let me break it down. So step one, a tech giant, let's say a Microsoft or a Google, invests a ton of money into a hot AI startup. Step two, that startup then has to use that investment money to buy cloud computing from Microsoft or Google. And then step three, Microsoft or Google points to that revenue and uses it to justify buying billions more in GPUs from NVIDIA. Burry's saying it's a house of cards. The same dollar bill is getting passed around and counted multiple times before it ever finds a real paying customer. And look, it's not just the demand side of the equation that's being questioned. For the first time, really, NVIDIA's competitive moat, which has always seemed completely untouchable, is facing some real threats. It's kind of ironic, but one of their biggest problems is actually their own success. Their next-gen Blackwell chips are supposedly sold out for the next year. Now, the bulls will tell you, great, that guarantees revenue. But the bears have a different take. It puts a hard cap on their growth. And maybe more importantly, it forces customers who are desperate for chips to start looking at alternatives for the very first time. And this leads us to what might be the biggest long-term threat of all. NVIDIA's biggest customers, we're talking Amazon, Google, Microsoft, are also becoming its biggest potential competitors. They are pouring billions into developing their own custom AI chips. I mean, the motivation is just too big to ignore. Why would you pay NVIDIA $30,000 for a GPU if you can build your own good enough version for way, way less? All of this funnels down to the final and most important question for anyone watching this story. What is this company actually worth? And believe me, the answer is a total paradox. This slide really shows you the heart of the whole debate. If you look at one metric, the PEG ratio, which compares price to earnings growth, the stock looks, well, kind of cheap. A ratio around 1.0 is often seen as a bargain. But then you look at another metric, the price to sales ratio, and it's at a level we haven't seen since Cisco at the peak of the dot-com bubble. So is it a historic bargain or a historic bubble? It completely depends on which ruler you choose to measure with. So because of all this uncertainty, a lot of analysts are saying the era of just blindly buying and holding NVIDIA might be coming to an end. The game is shifting now towards managing your risk. You're hearing a lot more about complex strategies like protective collars or just simple diversification. And most importantly, everyone is watching the spending plans of NVIDIA's biggest customers like a hawk, because that's the real lifeblood of the company. Which really brings us to the final thought. Let's make no mistake. NVIDIA is one of the most important companies on the planet right now. It is literally building the engine for our AI-powered future. But the stock market, it's a machine that's always looking ahead. And in a market that has already priced in a perfect future, the question we're all left with is, what's next?
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.